There are no immediate signs that we are headed towards a housing market crash, but there are a lot of signals pointing towards a slowdown in the housing market headed our way. Today, I want to break down what these signals are, what's still fueling the market, and some key takeaways that you should be aware of if you're planning on buying a house in the next few years. The first important thing to recognize is what is still fueling the market. Obviously, the last few years throughout COVID have been crazy. We've seen large price gains, as well as some new shifts that have really just come about this year. So the main things fueling the market and the demand right now are, one, move-up buyers. You have a lot of people who bought houses a few years ago who are now selling them at their peak for appreciation and gains that no one would have imagined a decade ago. These home sellers are move-up buyers, so they are still in the market, and now they can take all of that cash, all of the gains that they got from selling their home for the top of the market, and put that into their next home, making extremely competitive offers. Second, you have the millennials, which is the largest generation in history. They're typically aged between about 29 and 32 now. And why that's important is because the typical first-time home buyer purchases their house at 33. So you have, just historically from a demographic perspective, tons of new first-time home buyers that have been pre-qualified or are looking for the type of resources to get into the market. The third thing mainly fueling the housing market right now is rent prices. There's a huge lack of affordable rentals, lack of rentals, period. Due to the lack of inventory when it comes to available rentals, prices have gone up. Those high prices have also pushed a lot of people to consider buying a home, because in a good portion of markets, if you're having to pay $2,000 plus in rent, you might be able to buy a house and have a mortgage payment for that much. At least you're investing into something that you own rather than just paying rent. The lack of available housing when it comes to rental units is also still fueling the home sales and the home buying demand. I don't know if you guys had seen this, but last week, a woman in Austin, Texas went viral for posting a TikTok where she showed that her rent was going to go up by $2,500 a month. So she had previously been paying $2,200 for her rental, and now it's going to go up over $4,600. In hot markets, especially ones like Austin, Texas, with these extreme rent increases, a lot of people who love renting and never really put thought into buying a home are looking at the possibility. On the opposite side, there are a lot of signals, like I mentioned in the beginning of this video, that are showing we might be seeing a calming down of the real estate market. And really, these are signs that demand could be pulling back starting now and moving forward for the rest of this year. One of the big factors is interest rates. 30-year interest rates have risen to just above 5% on average, and this has been, over the last year, the most rapid increase that we have seen in interest rates in over 50 years. With home prices going up, as well as interest rates going up, this is making homes overall less affordable. In fact, this year, a new study was released that if you bought the same house today that you bought last year, your monthly mortgage payment today would be 20 to 26% higher than that same property just 12 months ago, purely because of the price and interest rate gains. On top of all this, the price hikes, the interest rates, we also have inflation. And it honestly is just a whirlwind of a market at this point. It's almost comical how ridiculous it has become. Inflation has reached 8.5%, which is higher than it has been in over 40 years. Now, this is important because it is costing people more money just to take care of their basic expenses. So in high inflationary markets, we don't have a society that is able to save extra money to work towards goals like home ownership. It is this restraint on the market that is pulling some buyers back, and that I believe will bring some of the demand in our market down. For buyers that are wanting to stay in the market, they are forced to look at more affordable options, if there even are any, or look at even more affordable markets, like moving to a more rural area in their state or moving out of state altogether. So we still have this fueled demand from buyers, but at the same time, there are additional pressures through the pricing, through the interest rates and inflation that are bringing some of that buyer demand back. So what's the result of all of this? The National Association of Realtors Pending Home Sales Index fell by 1.2% in March, which was the 5th consecutive month of decline. We've also experienced both a drop in existing home sales as well as new home sales. Existing home sales declined and have been lower on a year-on-year basis for 8 consecutive months. The new home sales have been lower on a year-on-year basis for 11 of the past 12 months, so almost a year now. Another interesting thing is that the Mortgage Bankers Association Purchase Loan Index is running below 2019 and 2021 levels. In fact, they went on to say that this week, the Purchase Loan Index is down 14% year over year. So that means that 14% less people are going and trying to get loans to buy this year versus last year. The metrics from the Mortgage Bankers Association are important to look at because they are good predictors of what we will experience in the market in the next few months, because most likely people who are getting pre-qualified for a loan today will be closing in 30, 60, 90 days down the road. We talked about some data from the National Association of Realtors, but the California Association of Realtors also reported that their numbers year to date so far are 7% down in home sales. Now, this is important. I know that this is California. We're not all in California. Arkansas girl right here. But this is important to note because California often serves as a metric and a good predictor of what we will see nationwide, particularly in a few months. So by them seeing a drop in sales by 7%, it is likely that we could continue to see a drop in sales affect more of the country over the next few months. The conditions of the market have not been kind to anybody, but of course we have talked about how they have disproportionately hurt first-time home buyers. And this has continued to be evident. FHA sales are down to only totaling 7.3% of all home sales. This is the lowest portion of total sales that FHA sales have taken up since 2008. So it's never been harder, in a sense, to get an FHA loan accepted because the market has been so competitive. The main takeaway that I want you to go with today is that most housing analysts are now changing their predictions for 2022. When we started out this year, a lot of people came with the strong first few months of home sales, and they're like, this is going to be exactly like last year. And in fact, most analysts were predicting at that time that our sales for this year would exceed last year and that the demand would continue to be strong, inventory would continue to be low throughout 2022. However, a lot of those analysts are coming back and making new statements, saying that they probably would be more likely to predict now that 2022 sales would be about equal to 2021's sales, or possibly a little bit lower just because of those extra factors that we talked about dampening the market and the buying situation. With the limited amount of inventory that we still have available, prices are going to continue to go up until that demand comes back down. In addition to this, as mortgage rates rise, we will likely be seeing a slowdown of the home appreciation. Don't freak out. This is not a 2008 situation. In 2008, we had inventory flooding the market, foreclosures were present, and the demand was not there to keep up with it. The home prices are not skyrocketing. They're not appreciating as fast. Instead, we're going to hit a plateau. We're not going to plummet down. And I'm interested to know what you all think of this. Do you think that this is going to be the start of a slowdown where we have a little bit of a drop in the overall demand so that the inventory can pick up and things can level back out? Let me know in the comments below. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.